Hello everyone, this is Evan here from the Trade Risk on Wednesday, November 16th with a midweek market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. And before we get into today's video, I want to remind everyone that tomorrow is our webinar. If you go to the home page, scroll down to the middle of it, you'll see the link here in the middle of the page, or head to thetraderist.com/webinar. It's titled Swing Trading for the Active Trader. This is a slide deck that and presentation that I just did locally, and I want to present this online for those of you who are interested. We're going to cover a wide range of topics, specific trade setups, multiple time frames, end of day trading, risk management, taking profits quickly. There's a lot of different things here and more that I didn't list there. So if any of that sounds interesting to you, then I encourage you to sign up here for tomorrow's event. If you cannot make it, I can send you a recording to the event. So I hope to see you guys there tomorrow, 1 p.m. Eastern. Now, getting into the markets, it was a pretty dull day, all things considered. Not a whole lot of movement today across the major averages, but let's take a look at where we've come from. Certainly, we've come pretty far in very short order. We know this. We've talked about the initial sort of move here following up the U.S. election, and so far this week, we opened up here on this candle. We have made upside progress following through to last, this initial sort of breakout week to the upside. We are slowly but surely kind of following through to the upside and adding to last week's gains. So you're getting that quote follow through week that many traders are going to look for. So things look good right now. There's momentum to the upside. Certainly, we know that the market has become very split with some very concentrated leaders and with some very concentrated laggards. Now, recently, we've seen that sort of unwind just a little bit, rotate a little bit, if you will. We'll get into that in a little bit later this video. But so far, breadth is trying to improve, which is a constructive thing. We know the technicals and the momentum are behind this market. We want to see the breadth really kind of broaden out. Last week we talked about new highs, stocks making new highs. We saw a nice expansion in that number last week. That's very constructive, but we were worried about the number of stocks actually advancing, and you're starting to see that actually improve more and more this week, particularly yesterday is when you saw finally a bit. If you're looking at the NIMO, for example, McClellan Oscillator, you start to see that picture kind of getting painted with some upside expansion. That's constructive. So you're getting almost all three elements now. You're getting trend, you're getting momentum, and you're getting the internals all sort of working higher. That's a market that I certainly love to trade. Trend following breakouts, that's going to do well in this type of environment. So big picture here, we want to see us stay above 217 and a quarter. This is a pretty significant level, right? These were the highs from July, support in August, and now we're trying to get back above that, kind of the highs in September and October as well. So this is a pretty important kind of line in the sand that you want to see us hold above. Certainly, the all-time highs are right above us within 1%. And honestly, this is a unadjusted chart for dividends. If you were to look at an adjusted chart of the SPY, you would actually see we came within pennies or maybe 20-30 cents yesterday and on last Thursday, of tagging new all-time highs in the SPY. So it depends if you're looking at an unadjusted chart or an adjusted chart. Keep that in mind. The bottom line is we're pretty damn close to all-time highs, momentum, trend, all of that kind of getting back to the upside. That's very constructive. So that's our outlook. The way we're playing it is being long this market. We've aggressively kind of picked some stocks up on the long side recently, and we have pretty high exposure. In fact, the highest exposure we've had in a long time. So that's the way we're going to continue to play it. We took some profits today, and we're going to continue to rotate out of names, take some gains, look for new leaders emerging. That's sort of the way we like to play these types of markets. Breakouts typically do well in these types of environment. So IWM, let's go there next. This is the most impressive of the major indices right now. As you can see, we're continuing to just stay very bid up here at these highs. Not quite, actually, yes, they are now the new highs here. So very constructive. We just blew right past all of this previous supply and resistance. Didn't even really stop or have struggle here at all. We just kind of surged up here, and we're staying bid up. Look at the MACD here down here at the bottom end of my chart here, the second panel here, and take a look at the expansion that you've seen and just the straight line move. The number isn't really that important, but when you get this type of magnitude move in the MACD, that really just shows you there's a ton of momentum there. And yes, while you may be overbought in the short term, dips should be looked at as opportunities. These typically signal more trend to follow. Again, doesn't necessarily mean it has to be tomorrow or the next day, but if you're looking out a week, 2 weeks, 3 weeks, 4 weeks, these generally tend to resolve in the direction of this strongly sort of surging MACD. So keep that in mind, staying very pent up right now. And the Qs getting some life today and over the past 2 days, really starting to see a little bit of rotation back into perhaps an overreaction or an overly beaten up NASDAQ 100 following up the election last week and late into the week where we saw that sell off. So is constructive. You can see the 8 and 20 are still not positively aligned. We're still in this range. We're close to, we're not far from all-time highs here in the Qs, but you can see just on a relative positioning basis, we're still in the middle of this range. We got to get back up here to 119. You want to see this start to participate here. You don't want to see just financials and just industrials leading us. You want to get some of these tech plays in there as well. So starting to see that a little bit today. That's constructive. So, NASDAQ 100 is an index that we're long. We were in it yesterday, took some profits in it today, and we continue to be in here so far. Now, getting into some of the other major markets, we'll go to TLT first. TLT still beaten up, right? We saw that big unwind last week, really slammed, cut through support, trying to stabilize, had a nice session today up almost 1%, but you can see even a 1% gain in TLT, which is usually a pretty meaningful move, still is just kind of a blip here on the big kind of 10% or what have you, magnitude, 8% magnitude sell-off we had last week. So again, very, is oversold, due for a bounce. You're seeing that now. Let's see if it can be a more meaningful bounce, an actual, low that gets put in here, or is this just sort of a bounce and a bear trend that should be sold? Yet to be seen. I would not want to be playing here. There's just better opportunities out there, in my opinion, to be messing around here. GLD, we'll go to the metals next. Similar situation, right? Really saw that big unwind last week, and then you're getting just kind of a little bit of a lifeless bounce here on the low, off of the lows. Could it be more meaningful? It may, but for now, I just think there's better spots out there. Also, take a look at GLD. Silver and GLD both have this, potential. You could call it a head and shoulders, but you can just kind of see how it's coming back down into some major support down here. You want to keep that in mind. Again, maybe this is a meaningful level we can bounce off of, maybe get back to 120, retest the breakout zone. But once again, I do think there are some cleaner plays out there. Silver, similar thing, right? Last week, huge unwind, and then we're seeing a little bit of just a little bit of kind of a bounce and some life showing here at last week's lows. So those are the metals there. If we go to USO, we talked about this one. We put this one in a post out over the past couple of days. First, we talked about the breakdown here, or the bear flag that set up. We did play that. We were able to capture some profits out of that. But take a look. It only lasted 2 days. Yesterday, we saw this nice kind of hammer reversal here, and then we had the big follow-through day yesterday. So Monday, we saw the hammer. Yesterday, we got the follow-through back above this support area over here, right around $10 in USO, and perhaps we can start to carve out this range. We do have, I think, the big OPEC meeting later this month that many people are anticipating, so that's surely to sort of sway this market in the coming days and weeks. So keep an eye on USO heading into that, but for now, as long as this low holds down around $10, I think you can at least have a place to kind of put your stop against and know where you're wrong. If you do want to try and be long USO for some type of mean reversion play, otherwise you can kind of wait for some momentum to really kick back in here. UNG also recovering just a little bit. It did get slammed over the past couple of weeks. If we go to the weekly chart here for UNG, you can see that 4 weeks of some pretty strong selling is generally a good place to see some type of bounce. We are up 5% this week, but still, when we're down 20% over the past month, 5% is not a whole lot. So keep an eye on the 770 level. That was prior support down here in July and August. See what happens if we can get back up there and retest it in the coming days or weeks. Now, getting into some of the sectors, IYT, right? We talked about the transportation average, which is really just igniting to the upside. We're looking at a weekly chart, but last week at a 6% increase is one of the largest surges we've seen there in quite some time. Back to the daily chart, and you can see just how far we are extended up above the 8-period moving average, which is a very fast EMA, and it's still holding up well above there. Again, take a look at the MACD. When you have strong kind of straight line vertical surges like that, that typically bodes well for future price action, for future trend. In the short term, just like we saw today, we wore down, but let these moving averages catch up, typically dips our opportunities. So I'd point that out once again here in IYT. Financials, very similar situation, right? Looks identical. Big surge in last week, even larger surge, right? Up 11%, taking out all recent highs here. And again, maybe overextended in the short term, but looks good longer term. Industrials falls into that same situation. IBB, which did cool off a little bit more today. It's actually at some prior resistance here. You've got a lot of supply from August and September at this general area. So, as long as it's under 300, you could probably say you can make a case that it's still range bound. But so far, this nice open gap is still here. That's constructive. And you want to see if that can hold as sort of a breakaway gap and can, just essentially propel prices higher. And then finally, semis. Put this out today on the TradeRisk.com. You can go read a post about this sector. Semis, they've been the market leaders for this entire year, and recently you finally got a meaningful consolidation. A pullback off of the highs, and whether granted it didn't move and retrace too far via price, it still did through time. So almost 6 weeks. Almost 6 weeks of consolidation. Now it's starting to emerge again. Keep an eye on this sector. If this is something that you've been waiting for, this might be your opportunity to get back aboard this trend. On the downside, let's talk about utilities, right? Same old, getting beaten down. Just last week they saw that they saw the sell-off, got a little bit of a bounce here this week, right? Monday we came in, we found some support, we bounced Tuesday, and then today we're just kind of flatlining just a bit. So encouraging to see the nice 2-day move off of those lows, but again, with the 8 and 20 still kind of sharply lower and some momentum built to the downside, you have to be cautious here. There's just better spots to sort of pick trades out of in the near term, at least. Staples, very similar comments apply, right? Last week we really sold off, saw support get broken, and now we're getting a little bit of a bounce, but again, just depends on where you really want to be in time horizon. XLK on a relative basis still relatively weak, but again, you have to just remember we're not that far from the all-time highs. This can start to rotate back into this, and if we start to clear above 47.50, 47.70, then we're suddenly right back knocking on all-time highs here, and that could be a nice kind of rotational play in the coming days and weeks. So keep an eye on XLK. So that's the wrap up there on some of the sector analysis. Let's look at some individual stocks that we haven't taken a look at in a few videos. Apple saw a nice session today, up 2.74%. You can see it did come back here and fill this gap back from September the 13th. And it is still below the 8 and 20. That is a little bit of concern. You get this kind of level right here that I'd be paying attention to, 112. If you want to start to get positive momentum back in the stock, you'd have to get back above there. But for now, you can clearly see there's some interest down here on these lows. We got as low as 104.50 yesterday. So you got a sharp 5-point move off of the lows already. So there is interest. Let's see how far this bounce can go. There's some previous resistance in here, like I say, around 111, 112. That'd be a near-term target if you're in this. Google also had a nice session today and yesterday, up almost 3% yesterday, added to that a little bit today. 790, this is a very important level. You can see got a nice hammer forming here on the weekly chart this week, but you do want to get back above 790. That'd be a nice overshoot of support, which is 790, and if we can get back above 790, then I start to say that this looks pretty good for some type of year-end run if it can reclaim support and sort of really demonstrate that we got a good washout here over the past week or two. Amazon, sort of similar situation, not as strong, but still, you can see trying to hammer out here on the week as well. Past 2 days has been a little bit constructive, but the 8 and 20 a little sharp, more sharp, kind of heading lower here. So you can see the sell-off was a little more ferocious. The unwind here, and Amazon got as low as about 710, and it's already 30 points off the lows. So let's see if that can continue. Twitter, let's go there next. You can see filled this gap, or got pretty close to it. Yeah, it did fill this gap here from October the 10th. That's constructive. You can see, look how tight price is right now, just kind of grinding higher in this little rising channel. Is that going to be some big bear flag? It could be. If you go to the weekly chart, you really want to see this band of resistance get taken out right above, essentially $20. Twitter above 20 really starts to get momentum in the name, something that it really hasn't had in a number of months, if not years. So $20, that's certainly the big level that I think would prove that this is in fact some type of big bottoming pattern that is sustainable. But for now, you just have to be cautious, play up, or trade it just opportunistically inside of these smaller ranges. What else can we look at? Tesla, been weak, still, it's at this 180 level that has been support way in the past here. You can see back in 2015, 180 has always been an important level, but it still looks vulnerable. I think it's got some news it's got a lot of controversy, I think, or news voting coming up. If I'm not mistaken, I haven't been watching it too closely, but you can just see it's at an inflection area, long-term inflection point here. Let's see how it reacts. Does it completely roll over, or can we get a quick surge and false breakdown, if you will, below this 180 level? I think that would be interesting in the coming days or weeks. So we will leave it there. I hope this video helps. And once again, I hope to see you guys there tomorrow at the webinar, traderisk.com. Go to the homepage. You can sign up there. So thank you so much for watching, and I will catch you next time.